All right, hey everybody, happy Friday to you. October 21st, 2022, and we are ready to jump into earnings season next week. We had Tesla hit it off already, and it's quietly above 200, but the question is, does that set the pace for next week? So we got a few charts I want to run by you real quick. 50% retracement from the most recent low at 3,500 on the S&P, going up all the way to the second week of September, gives us 38.38 half. You've probably heard me talk about this every day in the futures or the day trading room here at Simpler, and we made some pretty good progress to get there. Now, I'm not really wanting to speculate around earnings, because we really don't know what's going to happen. But let me show you something very interesting. The VIX has two squeezes that are worth looking at. So I'm looking at the daily time frame. Nice green 10x bars on the VIX, which is kind of interesting. And you've got the daily squeeze. So that's interesting, but check out this weekly time frame. This thing has been squeezing ever since the dinosaurs roamed the earth. And now we're finally getting some black dots on the histogram. A little bit of an uptick. The question is, does all the progress that we've made from 3,500 all the way back up to 3,700 for the past 7 to 10 days, does it all get erased? And do we all finally get to see the final slam of the devaluation of big tech and big tech earnings? And do we finally see the squeeze on the daily time frame fire on the VIX? In other words, are we going to revisit 3,500 by Friday of next week, or do we actually stay above the 50% reversion to the mean at 38.38 half and continue to at least target the 3,900, 3,925? So we do have a ton of 0-day expiration options expiring every Monday, Wednesday, Thursday, Friday, and we've been trading in a really tight channel. My question is, which way does it break? I think we're all kind of trained that things recently are continuing to break lower. And then whenever you take a look at the daily chart on the VIX, it's like, well, you know, why wouldn't you want to have some puts or any type of bearish exposure? It certainly makes sense. But let me just kind of throw an idea out here, and it's something that I'm exploring with selling deep in the money put credit spreads, just kind of having some bullish exposure, strong convictions loosely held. It's one of my favorite Carter sayings, and I think that's the way to trade this market right now, where it's like, yeah, if you want to be bullish, you can certainly jump in on the long side and be a little bit aggressive and have something on the downside just to kind of hedge away, even if it doesn't work out. So the two questions that I have for us going into November is, November midterm elections are coming up. Are we going to continue to prop the market up, or at least up as much as we can above 3,700 until that happens? Okay, and then maybe December would be just kind of a nasty month. We've seen that before recently in a recent December. So I'm not putting it past us. The other question is this third quarter earnings, or this last part of heading us into the fall, this big tech earnings coming up Tuesday, Wednesday, Thursday, is that actually a catalyst to continue what we've been doing, which is continuing to kind of give the bears a hard time, right? So if you look at August, September, if you've been shorting this market, you've been really doing well. But the market's really good at adapting and kind of switching things. And one thing that humans are not that good at is breaking out of the conditioning. And so I'm curious to see if we're actually going to have the short covering rally or a breaking out of the range that we've had and actually make a decent high. Not a recent high, but a decent high. And that could come in to the daily 50 or the daily 100, which would also mean $3,900 or even $3,925. I think I want to be on this side of the game. I really do. I think going into earnings, and especially with Tesla already starting out the vibe, if you will. I'm going to regret saying that, but it didn't fall apart. The chart over time has fallen apart, but every chart has fallen apart over time. So what I think is interesting here on Tesla is that it held a quant pivot level. It's above 200. We might just need to have a little bit more volume coming in, and it might just have to be the squeezing out of speculators through earnings next week. Okay? So on Monday, if we gap down to 3,700, it's something that I want to buy. It's something that I want to sell put credit spreads in going into either the Wednesday or Friday expiration. We'll talk a little bit more about that. But essentially what I want to do is kind of break out of the range. And where we close today on Friday at 37.72, I think what we can do is take a nice look at the hourly chart and go, you know what? We broke out of Thursday's range. This market likes to go to the prior session high or the prior session low. It kind of makes sense to break back down to the Friday morning low around 3,700, and then from there, I kind of like the idea of buying this market. 3,800 is the level that I'm looking for. 38.38 half is the more important level, the 50% retracement, all the way back to the September highs on this daily chart. And from there, I think what it does, especially if you're a new trader, it kind of gives you perspective of what is actually possible in this market in the eyes of a bearish market, in the eyes of bearish swings that have continued to be very, very strong. Now, we could really go into an analysis paralysis here, and we could look at 4-hour charts and analyze the 10x bars. Those are yellow. We could really go into an hourly chart and see more yellow 10x bars, but really what it comes down to, and this is kind of how I treat every earnings week, we just really don't know. And so it's more about defining your risk and sticking to a plan, knowing where our parameters are and knowing where it makes sense to not trade. So let me show you one more thing before I sign off. This is really interesting. It's called point of control. It's a chart that we talk about. It's a chart that I use a lot to kind of give us some perspective from the highs and the lows and where our benchmark, where our lines of interest are, or lines in the sand. So I typically pull this up on a daily chart, and the dark blue lines are monthly point of control. If you wanted to have an extra bullish target above that 50% retracement at 38.38 half, it would be the monthly point of control, which is this dark blue line right there. And that lines up perfectly with 39.50, and we're just basically talking about that right there. So we cleared out this weekly point of control, went back to the most recent weekly point of control, and I've got to think that if we do have a move higher, we at least go up to the 38.38 50% retracement point of control for next Friday. Okay? All right, so that's the S&Ps. I also wanted to talk about commodities with you, and we'll use gold as an example. I mean, I could go down a rabbit hole with you on Bitcoin, but I think all things just being equally correlated right now, it wouldn't be surprising to me if we broke below 1,600 in gold. Sorry for anyone that's in the gold selling industry, but at the same time, you didn't really think that gold was going to break below 1,700 a while back either, back in September, October. So here we are again, and we're retesting the mid 1600s. I've got some Fibonacci extensions at the 1272 at 1567. One of the things that I look for in the conversations that I have with other traders, these are also things that I've picked up in reading Mark Douglas's books, The Disciplined Trader or Trading in the Zone or anything like that, is whenever there's a bottom, there's typically a conversation of, did you buy any? Right? Did you buy any this? Did you buy any that? Whenever there's not a bottom, the conversation is, hey, when are you going to buy more? And in Bitcoin, and this kind of correlates over to commodities in general, But the conversations that I'm having are, I'll buy more whenever Bitcoin hits 15. I'll buy more whenever it hits 12. I'll buy more whenever it hits 9,000. And the interesting thing about a Bitcoin daily chart is it has a high compression squeeze. I don't think that's compressing to let go to the upside. Not in the age of purchasing power decreasing and inflation. So what I think we're looking at is a possible rotation out of Bitcoin, out of gold, and maybe a small rotation higher in equities going higher. And then from there, look out for December, because it might be quiet and choppy or loud and choppy through November. But I think the conversation right now is, I'll buy more whenever it's significantly lower. So that's the argument that I have against things like this and gold putting in the lows now. We'll see how it goes. Let's keep our focus. Let's pick our spots. Monday morning, we'll talk to you in the day trading room and in the futures room. We'll be talking about the 3,700 level if we're retesting that, trying to come in and see what it makes sense to buy it, whether that's in the options world or with futures. But before that, have a great weekend. Relax. We have a big week coming up, big earnings. I will see you on Monday. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.